Oh, how about now? Hello, guys. Can you hear me? Can you hear me? Can you hear me? Hmm. Hey, guys. 5,000 viewers. Can you hear me? Maybe yeah, maybe not. Oh, thank you, thank you, thank you. Okay, so yep. Thank you again. So yeah, we have. I'm waiting for a signal, so maybe we'll have two scenario here. Either we will have a reversal going to bull side, or maybe we will have a continuation. Okay, so that's our reversal. Right now, the market is trending on this level, 20,216, and just hovering around the previous closing and the today's opening. So we are here. Most of the trader are they're undecided if they will go long or go short. So it's a slow market. It is an Asia session, so it's always slow, and that's why this strategy works well. So yeah, so if you want to follow how I'm using this strategy, so I have a you can read the description below. So that's how we use this, and this is scalping one. We are scalping 1 minute time frame, so that's it. And in order for you to do that, you need to set up your indicator, and the indicator that we're using is number one is the exponential moving average 21. I'll go through this. This is what I do every night. So we have the input is length 21, source is close, and we don't have a smoothing line for this one, and then you can modify your style. So this is what we're using, and it's all available on all of the chart actually, and all of the platform. Maybe the name is different, sometimes moving average exponential, but they're all the same. Just make sure that the length is 21. uh, I don't know. Sometimes the source is by default, but this one allows me to choose which source. But I put the close, meaning when the closing of the candle. So that's the source. Okay. So the second one is we have simple moving average. This is not a smooth moving average. Okay. So this is a simple moving average. Length 9, source is close, and you need to add a smooth moving average, and the length is 10 for that, and that is the red line there. My style is blue and red, because the red line signals me if I want to exit the trade early. I do have a that's your so yeah, I will explain it to you later in a while. And then after that we have the super trend. So the super trend, our input is the average through range. Length should be 14 and the factor is 3. So that's it. That's the only indicator we need. Nothing fancy about this strategy. uh, I did not invent this. I don't know if I discovered it, but no one taught me how to use this. But I back tested this for like almost 3 months now. I'm still doing the back test, and there's a good chance that you will attain a 90% winning percentage, or a chance to not lose any trade or not hit your stop loss, because of the reason for that is because of this red line. You have a chance to do that. So the only weakness of this strategy is uh, number one is the user. Of course, we're not perfect. We are emotional sometimes. We're not robots. Sometimes we get emotional. Sometimes we predict more than, like, we override the strategy, and we predict and we assume. That's one of the weakness is us. The second weakness is consolidation. Consolidation. So as much as possible, don't trade during the consolidation. Like for example, this one here, even though you will see later on like a cross, but as long as the market will not show you the steps, so just don't. Okay, this is consolidation. You will end up like having a cross all over the place, multiple cross. Okay, then after that, we'll go to the step one by one, and I will give you a good example. And we have a very good example here. And this is the one. The signal happens at around 7:22, but unfortunately, I don't trade by this time. It's because the volume is not real. The low volume, the movement is not real. It's algorithmic. No one is maybe just a retail trader trading this time, and they are not really, you know, uh, as you know, the movement of this chart is algorithmic. You know, if no one will trade, or no one is doing the trade, it always shows you a market structure like this. I'll explain it to you why. And the only why the chart moves in this way, we have why we see some a continuous trend and continuous trend, and all of a sudden there is a big movement, is just because we people joining the market, making that. But if the market is not really, no one is no one is doing, like no one is trading, the market will just uh, go up, go up and down, breaking some little structure, formation of fair value gap, and then after that, go down again, and then we'll just like this. So this one is, no one is really like moving the market right now. So people are not really joining yet. We'll see in about an hour. Someone will join the market. But usually, like yeah, last Sunday, I don't know what happened. People, maybe traders are like active by this time, but today they are really not active. So, like for example, this one here, we have a sell out. This is indication that someone is moving the market. Okay, and then that's why we see the first signal. There's the first one. The blue line crossed the green line. I'm sorry, and then that's the signal that okay, we're going to sell, but we're not entering the market unless we have the confirmation. Confirmation number two is the shift of super trend to support the short, right? And then that shift created a market shift. This is the market shift. Okay, it created a market shift. Color that orange. Let's see if I think I still have my template here. Yep. And then after that, this we have a fair value gap. Uh, and then a bearish fair value gap. That's what ICT called it. But this is an inefficiency candle, a displacement. This move, this candle is a displacement. A displacement created a market shift, and after that we have a fair value gap. Well, because of this candle, now we have a fair value gap, and this is our entry. So we fulfill the three steps: the cross, the shift of super trend, the displacement, that causes market shift and formation of fair value gap. And then that's your entry. You put your entry, optimum entry is 50% of the fair value gap, and you put your stop loss just above the first candle. That's the optimum. Depends on your how much you can tolerate to risk. Uh, me, this is a very good risk. Look at that. Just 5 point, just almost 6 ticks, maybe 150 if you're using mini. And then you will, of course, it's up to you. If you target 1:2, you can easily achieve that. If you target 1:5, but 1:2 is the standard, of course. That's the standard that most of the people telling us to stick to that. But my strategy, I have an option to scale and catch a big movement like this. So the number five of this strategy is the exit option. So during as early as like on once you enter, and then you're not really comfortable of your entry. So the first exit that you can have is once this red line once the line will cross the red line. So like for example, this here, if you zoom it in, the blue line didn't cross the red line, right? Didn't cross, no cross in there. And we don't have a cross until here. That's the first option. Yeah, no, sorry, until here. That's the first option. So if you trade that, you already have exactly 1:2.3 risk to reward ratio. Okay, you hit it because you exit because that the signals tells you. That's the option number one. Option number two is when the blue line cross the green line, and that's our because that's our signal, right? That's our signal to enter the market. So if you follow that, the option number two, by this time here, uh, by this time you are exiting, you're already exited, you're already not on the market because we have this cross and the cross is here. And this is because this is our signal now to buy, right? This is our first signal. We have this first signal to enter the market for a buy. So the market is reversing, but it's not yet fulfilled because the super trend is still on the bearish side, not supporting the buy, and we don't have a displaced candle. That's the option number two. Option number three is like, for example, this one. You're not convinced that the market will go up by now, and maybe you're just like you still you're speculating, or your analysis tells you that maybe the market will continue to sell out. The option number three to exit a trend is when the super trend reverse. Okay, so as far that's the option number three. But me personally, earlier, once I enter early of the trade, once I have a cross like a blue, the blue will cross the red, I will exit the trade. I can always enter a trade if I if I'm not comfortable, I will exit. And most of the time, I'm holding a trade, so my last resort is the option number two. Once the blue will cross the green, I don't wait for the super trend to shift, because once that happens, most likely, most often than not, the trend will reverse by that time. But this is a good win, right? If I trade this one, we have like a, I don't know how much, maybe. Okay. Now, currently, based on my prediction and analysis, I have a two scenario that will happen here. So I'm waiting for this closing, or here on this. Maybe if we break this one, if we will have like a movement and then a displaced candle, cross and then displaced candle, maybe I will enter a trade for short, like a quick short, or we will see some reversal before that. So we'll see. But we are strictly following, unless I will not enter the trade unless I have a confirmation. Now, maybe I have a chance to enter the trade by this. If we break this and we will create some signals and displacement, maybe we will go for yeah. Until I told you, we'll go for a short, for a quick short scalp. Yep. But this one here, the movement is early. We have a movement early. Maybe we can wait for another hour at around 9 p.m. Maybe we will see some movement. Usually, the Asia market is active after 8 p.m. and then 9:30, 9 p.m. to 9:30 New York time, because I consider this 8 8 o'clock to 8:30 is, it's like a New York, like a pre-market opening or pre-range. I don't. It's like the one on the market. If you are trading New York session, 10 a.m. is the silver bullet, and then 9:30 is the opening, and then we have the 8:30 to 9 to 9:30 as a pre-range, pre-market range, like that. I consider the same. The only difference is we don't have much volume in Asia. That's why I love the moving average, because sometimes during Asia time we have a one directional move. Uh, Uh, hey, can you repeat the SMA and EMA you're using? Oh yeah, sure, no problem. So I'll show it to you, and it's on the description if you want. But you go to indicator. I already put mine as my favorite. I have moving average simple, or the simple moving average. I add it again. Did I? Let me see. Yeah, let's delete that one. Yeah, and the setting is length 9, source is close, and I add smooth moving average 10 because this is my exit entry, or early exit signal. That's what I call it. And then I just like modify or put a color according to my preferences, so blue and red. And then that's a simple moving average or moving average. They are the same. And then another one is the exponential moving average. And I'm using the length is 21 and the source is close. So the difference between the two, simple moving average move fast. Exponential moving average is like on the middle. They move and they follow after the simple moving average or moving average. And the smooth moving average is, the name says smooth, move slow. They are smooth, yeah, move slower. So that's moving average, three moving average. And if you are a moving average trader, you know that uh, moving average been there for centuries or maybe for 100 years, uh, since the invention of a computer. People are using that like ancient, in ancient time, and it's a proven really effective. It's an effective. It's a simple. You don't need to use your brain that much. It's very simple. Okay. So where am I? Yeah. So I explained it to you the exit rule. uh, so by this time, let's replay this one. We are still consolidating. I don't expect the market will move until 9 p.m. But of course, I'm just speculating. But I'll show you. Let me show you this. Uh, we're here. That's why. Actually, this is my. Uh, I enroll in another combine. Another challenge, try debate, just for the sake of education. I'm not using because it's hard to teach or it's hard to share this strategy on their platform. I'm using Top Step. It's hard to share on the Top Step X platform because I don't have much like things to play. So I enrolled in one combine, and I'm positive 600 already. Uh, just to show you how I trade. I want to help people who's having a hard time trading. I was an ICT trader. Yeah, I can say ICT is really fancy, but it didn't give me good good revenue. So went back to basic. I started using again the basic candlestick pattern, support and resistance, and trend. And I will tell you, you will never lose on that simple strategy. The basic, the simplest strategy that always there is the one who will give you a good profit. Like this moving average. Moving average is so simple. You can invent your own moving average, and you will find how you find it. Like if it is working for you. If this one that I'm just combining exponential moving average and smooth moving average with super trend. If this works for you, then why not, right? So like for example, this one we'll trade. It's around okay. You open the market, you observe, and then there we have the cross. We have the cross. I'm just repeating. I'll keep on repeating until you get it. And then we have the super trend shifting, and then we have a displacement. And then you have ac- actually you have a two. You have a two, and this is a beautiful fair value gap because it's because of this what you call that volume imbalance. So we have two here, and then you have another one here. And if you have this one and you don't you can't decide what to choose, use your Fibonacci, measure it, and put your entry here on the 50%. If you cannot decide, okay? Uh, yeah, you put your entry there just to get the optimum result, and put your stop loss there on the first candle that created this everything, and then target 1:2, like that. Like for example, like that, or want to trail your winning strategy. So that's how you use it. So because the volume is really low, you only have like 6 ticks, you can expand your uh, risk. We're not risking too much here. Okay, let's see. So, but uh, or if you don't want to left behind, you can put your entry there. Oh yeah, put it there. So, heck, so the reason I'm telling you this is sometimes you will left behind, and if you're left behind by the market, don't chase it. Don't chase the market. Let it go, and I'll wait for the. So like that. Let's see. Just see where we can. Okay, we have there. Let's see. I'll post from here. So we did not hit the 50% of the two. So if that happens, don't chase it. So let's see. For example, you choose this 50% of this. A while ago, I showed this an example, and I choose this first fair value gap. It's just because the displacement is already like down. The market shape happens here, so it's already far, and we are not risking much if we put our stop loss there like that. Whatever we're there, but your stop loss there. So risking 200, and then you are like, for example, okay, let's aim for 1,000 for tonight, like that. You see, let's remove all the drawings, and your option to exit is once the blue line cross the green line. That's your option to exit, for example, like that. The option number two, uh, because you are trying to catch the market. By this time, you are just trading. Okay, the blue line is so far from the green. I will still scale my win. Okay, I'm not losing. And by this time, if you are on this trade, most likely you already secure your your win like 140, and you are afraid that uh, at least if you hit, and then if the price will go back, or if the market will reverse, you'll not losing anything. So that's why I'm telling you that by this using this, you have a chance to catch the market, the trending market, and you have a chance to minimize your loss to not having a loss, like that, right? So that's how you trade this one. So we have, if I trade that one, I have already 700. All right. So we are here. We're here. We have the signal. I did not well. We have the cross. So the cross is just about to happen. We have a cross there actually, but we don't have yet the super trend. But this is the cross that I will consider. I'm still not entering the market because I don't see the. I'm still waiting for the super trend to reverse. Although we have a market shift happen earlier, there, and then this one I have. Maybe we will have not. We will not. Maybe we will not chase the market. I'm entering this market because this will move fast soon. Let's see. One more movement. Okay, let's go. Now put my stop loss here. How much I'm? How much this one? Oh, oh, my bad. The super trend disappear. So I guess we don't have the. This is a early entry. Um, I'm pretty sure I show it. Okay, I know now because I did not wait for this candle to close over here to form that. Yeah, sorry for that. Sorry for that, guy. Did not wait for the candle to close over there to form a super trend reversal. Okay, but it's fine. If this one, this blue line will cross the green, I will exit. Oh, there we have. And the actually the pair value gap that I'm prefer like I use as a reference to enter the trade is early. It's not really. It's early. It's early for me. It's early. And a displacement, a good displacement. This one is not that good displacement, but maybe we already have this. A good displacement is when the when this the displacement candle is like close on the body of, like, better if 50% of the body of the displacement where the market shift form. For example, this is a market shift, and if that market shift, if the candle like close above 50% of that previous high, like this, that's a very good displacement. If it closes here, maybe I will enter like two position, but this one, so this one is not really good entry because we did not fulfill everything. So if this blue line will cross, I will exit. Okay, so we did not fulfill anything. I'm too excited. But we have a market shift. We'll see. So if I am an ICT trader, this is my entry. But I left ICT long time ago. I don't wanna be ICT. Uh, what do you think of this trade? But for me, this is a early entry. I should not enter the trade. Okay. Uh, but no, we'll see. Maybe we're lucky, and because I have a rules that I'm strictly following. Once I lost one trade a night, whatever I see on the market, I will end. Like I'm not trading anymore. All right, look at that. So look at that. Beautiful, beautiful. Right, beautiful. Yeah, look at that entry. It's a good one. So let's see. Now we do have a displaced candle, and between these two and this one, this is your displacement candle because it's supported by the super trend. And then you have now a wow, this one is beautiful. All right, let's see when where this candle close, and then after that we will continue. We will map our what you call that, fair value gap, bullish fair value gap. I hope you're following. If you're not following, please leave a comment, uh, and I will explain it to you. I don't want to all of you watching here. I know you are 9,000. It's a lot, but I'm really here to help you guys. So uh, I want you to pass your funded account, and I don't want you to go through the things that I don't want you to. I don't want you to what you call that. I don't want you to suffer depression because you lost a lot. I don't want you to do that. So please use this simple strategy. This will help you. I'm not here to, I don't want your, if you, I don't want any fee. Uh, there's a lot of guru there that teaching a very complicated, and they said winning strategy, like a smart money concept and everything, and it's so hard to understand. You don't need all of those. You only need a simple. If you are onto support and resistance, trend lines, moving average, those strategies really easy to use, and proven to be used, proven to proven to be really like winning. You will win a lot by using them. Like you will have a profitable. The what makes trading really difficult is us. We're making it difficult. We're using a strategy that really it's complicated, sound fancy, market shape, change of character. It sound fancy, like that. There's a lot of thing, smart money, something over everything like that. I can trade just seeing the lines. I can trade just seeing these lines without this candlestick formation, or without this Japanese candlestick. I can trade by using only moving strategy because that's the only thing I'm looking right now is my signal, the cross of the crossover, the super trend. So I can trade using that. Now I have a tips for you guys. This is a reversal move. Sometimes during reversal, uh, the fair value gap, most often than not, is not going to be mitigated because of the sudden displacement, or the rally of a buyer. But what I found based on my experience is, when the market is consolidating and then you have a signal for short, short is more easier to more easier to to use, because it always or always retest or test your fair value gap, or if you are support and resistance, always test your resistance. And like for example this one here, if you are a support and resistant trader, this is your in here resistance. I'm looking for resistance. Yeah. So this area here, it's likely here or here. Like this is your resistance. This is your resistance. This level here. Most likely this is your resistance. And today's number psychological number is 20,240, and 20,200. So this is today's psychological number. I'm now explain it to you. A psychological level is where most of the people think, putting their. If I'm a stock trader, like for example, if you're a stock trader, most of the time you will put your entry or order on a even number, not an odd number. 20,200, 20,400, 20,240, 20,200, like that. I'm a stock market investor, and then most of the time I will put my orders in there. Like, okay, this apple, I want this apple to be on a 500. If I reach 500, I will sell. If I have like if the apple hit 450, I will buy. So that's a psychological number, and the way to explain this is most of the people thinks of even number thinks of maybe 60%, 70% of the people think about an even number than odd number, right? Uh, I don't know what else I can tell you, but everything about my strategy is down below. Set up your chart. I'm encouraging you to test even a week. Retest the strategy for a week, and I put there the session that where you can I mean what session you should trade. I put it there. So if you are trading indices like Nasdaq, ES, gold. I mean, if you're futures trading, I advise you to trade during the kill zone. If you're that trader, and if you're forex trader, uh, trade during the opening of any market. And the pairs that I will advise to you to trade, which you will become a very profitable, is USD JPY. USD JPY will make you a good profit. Why? It's because it's sometimes a one directional trending market, a slow moving market. I mean, slow moving pairs that trending on a one direction sometimes in one night. You can test it. But if you're trading forex, I advise you to use the exit option number two, which is when the blue line cross the green line. Uh, if you're trading forex, same goes to gold. Uh, I advise you to use that, or you can test it by yourself. Try it, and you'll see which exit option is works best. Because sometimes gold market is trending also one directional trending in a night. It's really good to trade gold. So test which pairs or which one you want to trade. Me, I've been trading Nasdaq for. I'm using Nasdaq as an example. Most of the time, it's because of the volatility, but gold, you will get a good profit using the gold. Also ES, but because the Nasdaq, I use micro on my real account most of the time, and Nasdaq has a good volume for micro, unlike the ES and unlike the gold. Yeah. Uh, Jason, thank you. What else I can explain to you? So, okay, let me see. Okay, now we are on this market. Uh, we're early. The market is still early. The movement is still early for reversal, and maybe once I see this blue line will cross the red line, maybe I will exit my entry because this is a scalping. Anything that you'll see right now, if you are like doing top down analysis, which is I'm not doing that in my scalping because I will my aim is just to scalp any swing, and by using this strategy you can do that. But if you want to make sure that your trade is really going to the right direction, you can do top down analysis. So by doing that, you start from the 15 minutes time frame, right? I know some of you knows this, and what you can see right now, I'm seeing that the market is trending up, but we are on the premium side already, right? Of the 15 minutes time frame, from this movement here to this movement here, right? We're on the premium side, which means the we are on the, let me see, yeah, from today we are on the premium side, and even from from previous day. Let me see, on a 15 minutes time frame, draw your Fibonacci. Sorry. Yeah. Anyway, yeah. So meaning the price is expensive, but based on my experience, that's not that premium and discount is not really that reliable. But that's why I don't complicate things. I will just because I'm just scalping using my proven strategy, the moving average, and I will just focus on the 1 minute time frame, and whatever I see there, I will not let anyone influence my trade because I've done that for the past. When I start using this and I'm doing my live, some of the viewers will comment like, "I think we're going on a upside, going to the downside direction," and then uh, I'm still, and then they're explaining what they see, and then I got carried away, and then I switched to to not, yeah, I will end my trade or because of that. So don't influence anybody. Just focus on the strategy. Whatever you see there, just follow that. Whatever you see, whatever the the moving average tell you, that's the real thing. That's the only one you follow if you're using this strategy. Unless the strategy will tell you to exit, like the blue line will cross the green line or the red line or the super trend shift, and then exit the trade. You can always enter the trade. Nothing's really complicated about this strategy. I don't know if you agree with me. I know those 11,000 watts are there moving. Jay, Jason is my friend, and he's a good trader with a good profit. And we uh, we trade together using ICT. We study ICT together. We tested ICT many times, and our demo account shows a great result. But in a real in a real time, we are not really winning good. Our favorite is Silver Bullet, but if you really follow his, we are following it religiously. All of the things that he's teaching, but it's really hard, and then it's not meant for us. So that's why we switched to a moving average. We tested this moving average, and we come up to this final indicator EMA 21, smooth moving average 9, and super trend. And this is where we become profitable. And before someone will tell you that when they will see this, someone will tell you, hey, why you don't add RSI? Why you don't add volume? I don't need to add because that will complicate things. I just want to see these three lines to play along with the support of super trend. That's it. Nothing. Yeah, that's it. Go ahead and test this strategy, and I'm telling you guys, you discover a gem. You discover. Yeah. Thank you, John. Thank you so much. Yes, just I want you to actually I want you to test this indicator and this strategy, and tell me maybe we need to what things we need to improve, and I will back test it. Maybe we can improve more these indicators. This is moving average strategy, but yeah, you can share it. Uh, we don't need to. Please don't. Yeah, the just don't share this to those new traders. It's so hard to trade. It's not an easy venture to, or it's not a easy if you are aiming to be professional as a trader. It's not an easy job to do. uh, it's depressing if you lost. It's I don't know if you've been to this process that you lost many time, you blown many funded account and challenge you, and you cannot stop thinking about it. You become very emotional. Sometimes you cannot eat. Sometimes you want the day to pass, like you want the day to move fast so that it's become Monday, so that it's a trading session again. I don't know some if you been to that process. It's really hard, and then you become, sometimes you become addicted to it. Like you're watching too much YouTube videos how to improve your trading, how to improve your strategies, and then um, you're getting things more complicated, and not knowing that those basic strategy is the one who works best. Like, yeah, the support and resistance. Some of the people telling us, yeah, that's not real support and resistance. That's for beginner. But that's how some of the richest people get profitable. The moving average, the trend line, it's easy to use and it proven to be effective. And yet, we are not doing it because we've seen some YouTuber telling us that they have 100% winning percentage by using their complicated and fancy strategy, and then they're offering us to learn from them. Been there. I enrolled some courses. I enrolled courses for a year, learning all of. I it's not wrong to enroll some courses. Those courses that I've enrolled for like 6 months and almost a year helps me a lot understand market structure. Helps me a lot read how to read the market. But if you will just focus on the basic, like the candlestick pattern, uh, trend trend formation, support and resistance, trend line. If you will just focus on that and then incorporate the macro, I mean the economic events, because that's the things that moves the market unpredictably. Like for example, if you're trading and then there is a news, avoid any trading on all of the news, because even though your strategy is working well, uh, it's not the market is manipulated. If it is not manipulated, and then you will just continue to form up and down moves, create a higher low, higher like if this market, if no one, like for example right now, if no one is joining this market, or if no one is trading right now, we, we, we will have this movement. So this movement here is consolidation, meaning no one is there yet to move the market. And the market is algorithmic, or this one is algorithmic. Even though no one is doing the trade, this candle will not go flat. This will not go, it will continue to have like this, like this move, creation of like a little displacement with some fair value gap, and like, so that's what I've read on one of the books that I've read. That's how this is an algorithm, and that's proven that's true, proven true. So use the simplest strategy that you're comfortable using it, and proven to be effective on your trading journey. And the way to do that is to test it. Don't You can test it using the automatic strategy tester, but to tell you to see it actually on a screen, like I don't know if you know how to trade, but how to replay trade. If you do a replay trading on trading view, go to the replay and then just back test it. So I'm encouraging you to do that for a week, like last week. Replay trade the last week using this strategy, and you will see. And then you will also discover what is the picture, or what is the what is the setup of a trade that you're looking for, because not all of the setups are like this. Not all is like this and like this. Not all. Sometimes, like for example, this one here. It's fine. Uh, for example, there's a shift, and you don't know if this one here, if like for example this one, you will see this move, and all of a sudden by this time the price will start to consolidate, like from here. So meaning the market will start to consolidate from there and here. Uh, if this one is start to move, consolidate back and forth, it's hard to trade that movement, because it will always show some setup, and it's because the range is high. But you can trade that because you are protected if you follow the early exit rules. If you follow the early exit rules, you can have a good profit, even though the market will start to consolidate in on this range, like 20,200 to 20,250 is still profitable. But if the market will like this consolidation here, consolidating on a very minimal move, which meaning no players on the market, just don't trade that, because you will not earn anything from this movement. So that's how. And the the good thing about this strategy, the best thing about this strategy is to catch a movement like this. To catch a movement like this. Uh, Let me show you. Uh, let's replay this market, and I will show you what I mean. Uh, let's see the Friday. You see this? This is still. You see this market when this is around 9:30. You see this market? You have a chance to catch this, like a very good chance to catch this. And if you trade this and you follow this strategy, okay. So you wait for the 9:30. Let's replay this market. And last week I have I have a huge win. So like that. So you're waiting for you're waiting for the market. Now, my rules is not to trade past like before 9:30, but it's up to you guys. But you can always do it. The reason for that is 9:30 is really unpredictable. Even though we have a signal there, we have a signal here. Sometimes the market, based on my experience, is like suddenly we'll have a good volume going up or going against that direction, especially there is a news, or even a little news, or maybe someone is manipulating the market. And so, but after 9:30, I can consider a good trade. So, like for example, this one. All right, waiting for the signal. We already have a signal, but it's not really clear. Now it's consolidating. Now the All right, like this. Okay, you see 9:50 already. By this time, I am the market is consolidating. So this is the time, and then it's going down. I passed 9:30 already. 20 minutes have been passed, or for 30 minutes. This time I will say, and then I check the news. No one there's no big events going on. I'll consider this now as a signal. And then it's because we have now so this one, will you consider this a market shift? I will not consider this a market shift. Nothing is going on. So I'll consider market shift starting from 9:30 to 10, and then this one is market shift for me. And then this tells me that there will be a continuation, and if I will enter the trade, I'm not risking anything, or I'm not risking a lot because of this move. And I will show you. I do have a fair value gap there. Bears fair value gap. And then this movement, I will, anything that will go up, I will not wait for the price to go there. If this happen, and I will just, you see, I'm late. I'm trying to, and even though you put it, I will just put my, like, my entry here. So by this time, even 50% of this, you know why I put my alternate, you know why I will put my entry here? It's because this fair value gap is thin. It's not that you don't need to be optimum at 50%. You can have it here. Like, I will sell here. I'll put my stop loss here. And then uh, by this, maybe by this session, I'll be using a micro, maybe micro of 8. So I don't, my tolerance is below 500. I don't risk more than 500. So I will use a micro, and then I will scale this. Like this. You have a good chance to, you see. I will scale it more, and I will exit once I see my exit rules. Not yet, not yet. So why I did not exit? Because my option is the option 2. And even though I have this, but it's still, let's see, by that time I'll be out of the edge. Oh, so I have like 2,000, and that time, then after that I will observe the market, uh, and then I'll see if I will go. Again, this is the time you enter the market again if you want to. But I'm advising you that once you have a good profit, like 1,000 more than 2,000, you don't need to be greedy. Just like end the trade. You already have 2,000 for today. Wait for another signal to come, right? No need to no need to be greedy. That's how you use it. Yeah, that's right. We're just human, so we tend to make mistakes. But yep. Uh, so let's observe this market. I'll be ending this trade. Already have 300, and yep, that's good. That's good. And you know why? Why? Even though I did not wait for the. I'll explain to you. I did not wait for the blue. So it really depends on your. I did not wait for the blue to cross the green. You know why? If you are familiar with, I know you know this, most of you. Basic candlestick pattern. If you see this, this candle, you don't need this strategy to just get out of the end. Get out of the. This is a this one. This three here is a basic candlestick reversal. What's it called? Three candle reversal pattern. A basic one. A basic. Even without that, even this one here. This tree here, it is a basic candlestick reversal pattern. You don't, yeah. So yeah, so it's 9:30. Slow market will end at 11 p.m. So that's my time to scalp Asia market. That's my time to scalp Asia market is 8 p.m. to 11 p.m. And after that, but now because I'm working tomorrow, so I'm ending. I'm good at how much I have today. I have 900, right? I have 900 uh, just today. It's, you know why? Because I broke my rules. I trade this one. I trade this. I tested trading this one, the opening market. I wait. Someone told me that you want to try, like, during the opening, like a challenge. He challenged me and said, "Okay, we have a countdown. Then when the market opens, He said he will sell and I will buy. So I bought here. That one is just a a challenge. So don't follow that. No, we didn't use any strategy there. I just tried it. I have like 600. So now uh, let's sculpt this for continuation. If you want to, I'll let's see. Mm, uh, the blue line will cross the green sooner or later, and then we'll see some if there is a fair value gap or there's a displacement, and then you can enter the trade if you want to. But this is the range now for today for tonight. I'm pretty sure this will be the range for tonight. The the market will play. The market will play around this level for tonight. And if you want to catch a good movement later on, you want to you can trade again at around like London opening. London opening maybe will break this high and this low. Most yeah, I'm pretty sure. So we'll see. And I'm guessing I'm guessing that let's see the price. Let's see. Okay. So I'm not telling you to, but if you are like a swing trader for today, I'm guessing there will be a sellout at this level of 18,900 to 19,600 because I'm pretty sure most of the buyer here, like we have a good rally last week, and I'm guessing that this is just a guess. I'm guessing that most of those people bought stocks at this level will start like selling some. Maybe we have this. You see this this volume imbalance here. The price will feel this maybe this week, maybe this week. So, but I'm just speculating. Don't take me. I'm not really expert, but what I can tell you is just follow this strategy and you will have a good profit. Yeah. So that's it, guys. I'm ending my live because I need to take care of my kids. I need to go to sleep, and I have something to. I have some work assignment that I need to study. Okay. Thank you so much, and I hope you will come back for more. I will be doing another session for tomorrow because I want to pass this. I want to pass this challenge. So I'm 2,000 away, right? 2,070 away, and we I don't want to rush this. Actually, I can win this. I can win this now. I can have like 3,000, but because I'm pretty sure that trade works well, but I don't want to do that because I'm just using this for educational purposes. This account, so let's see. Let's see if we can pass this one. Now, if I'm hesitant to enter the trade now, even it's going down. I'm not because yeah, I already exit the. Uh, Another thing you don't do, like for example, now you have that profit and then you exit here. Don't enter the trade unless you have the cross. If this blue line cross here and then cross back, look for a fair value gap and enter because maybe that's a continuation. But this price, if we will not break this, if we will not see any displacement that break this level here, and then a pullback to any fair value gap that form, and then don't enter the trade, or wait for a reversal if we have a signal for going down. All right. So thank you so much for for watching. That's it for today. See you tomorrow. I hope to see you tomorrow. If you are This is not a signal live. So I could be wrong. Sometimes I get emotional. So um, I just want you to follow that strategy. Please follow the strategy. Back test the strategy, and that strategy will give you a will help you pass your funded account. All right. So thank you guys. Good night, and I need to go to sleep. My kids is I need I need to end the live. I need to take care of my kids. Thank you so much, guys. See you.